Good evening and welcome to the last edition of the program Capital Markets. That's for this year. Thank you for joining us. I'm Tempula Shaju. For the first time in 4 years, the Nigerian stock market closed the year in the positive territory as the all-share index returned 42.30% year-on-year, making it the second best performing exchange globally after the Ghana Stock Exchange, which returned 44% in the year. The Nigerian stock market opened low at 26,000 psychological line with a market capitalization of 9.24 trillion naira. It then appreciated 7.91% in the fourth quarter of the year, while on a month-on-month basis advanced 0.79%. After turning in a 56 basis points gain on Friday and 128 basis points week-on-week, the banking sector remains the major outperformer in the year's market rally as the index closed 73.32% higher year-on-year. The consumer goods sector also ended the last trading session of the year in the green, that's by 156 basis points, following advances in Nestle, Dangote Flour and Unilever, culminating in a 37% return for the sector. And the industrial goods sector had a 10 basis points movement yesterday, Friday, but 91 basis points week-on-week for the week-to-date analysis after the closing of Friday's session. And the week on the back of this all happened on the back of food following pressures by a decline in WAPCO and Dangote Cement. Now, despite the drag, the sector ended the year 23.8% in positive territory. And wrapping up the year with firm gains and surplus by 500 basis points at the week close, the oil and gas sector came closing in by 576 basis points year-on-year. Now, going into 2018, analysts at Vetiva Capital anticipate continued progress on the Nigerian bourse amidst a positive outlook for FX earnings on the back of stable oil prices and production levels, as well as an improving economic environment. Now let's take a look at the unlisted securities market, which is all popularly known as the NASD O2C. The USI, that's the unlisted securities index of that market, came closing this year at 604.88 points. That's by 3.11%. Its market capitalization moved to 409.34 billion naira as against the 396.97 billion naira that it closed at in the previous trading session. In terms of year-to-date analysis, the volume of shares traded came in at 960.62 million, while total value is 4.36 billion naira. Over to the fixed income markets, where we've got the 20-year, 7-year, 10-year, and 5-year papers at the FMDQ O2C precisely. The 20-year paper and the 7-year paper had depreciations in terms of prices, but rose in terms of the yields. The 20-year paper rose 14.16%, while the 7-year paper rose from 14.15% to 14.36% for this week. For the 10-year and the 5-year papers, it was flattish as the 10-year remained at 14.03%, while the 5-year paper averaged at 13.95%. For the tradable FG and Euro bonds on the London Stock Exchange, the 10-year, 5-year papers fell in terms of yields now, 4.58% for the 10-year January 2021 paper, and the 5-year July 2018 paper fell 3.31% from 3.44%. The 10-year July 2023 paper actually dropped in terms of price by 9 cents and came in at 5.10%. Treasury bills now for yesterday on the FMDQ O2C markets, we had a total of 33 deals, and total value of the transaction against those numbers was 44.661 billion naira. Now, the Nigerian Stock Exchange on Friday announced the review of the NSE 30 and the 7 sectoral indices of the exchange after the completion of the year-end review and index rebalancing exercise. The composition of these indices takes effect from January the 1st of 2018, and some of the changes made includes the entry of Dangote Flour Mills, Nascon, Allied Industries, and Diamond Bank into the NSE 30 index, and the exit of Owando, 7-Up Bottling Company, and USCN from the index. Others are the entry of Northern Nigeria Flour Mills into the NSE Consumer Goods Index and the exit of 7-Up Bottling Company. On the NSE Insurance Index, Equity Assurance is coming in, and Mutual Benefits Assurance, Regency Alliance Insurance, and Universal Insurance Company are outgoing. Etana is joining other listed companies on the NSE Oil and Gas Index, while Owando is exiting. And the free electronic dividends registration sponsored by the Securities and Exchange Commission technically ended on Friday, that's December 30th of this year. The regulator had paid commercial banks to register investors for free and announced the deadline of December the 31st of 2017 for the scheme, following the launch in July 2015. Now, from next year, investors are expected to pay a fee for the electronic dividends, as physical dividends will no longer be issued to shareholders. So 2017 was no doubt an excellent year for the Nigerian capital market, as already indicated by a segment of the market, that's the equities side of things. But to review the year on capital market, I sat down with the Group Managing Director of GTI Group, and that's Mr. Abubakar Lawal, who took us down memory lane as to some of the activities that impacted the markets this year. Let's listen.
Well, let me say that from the equity standpoint, the year started very slowly. If you recall, that start with the president was ill last year and he came back early this year. The economy was kind of quiet. As a matter of fact, the first quarter, the Nigerian equities market was in the red to the tune of about 11%. And interestingly, after the coming back of the president and the fiscal policy and the monetary policy managers started addressing those gaps. One of which is if you recall that we had a lot of global uncertainty, the price of crude was very low, and we had, I call it flight to safety, the whole of the better part of 2016, and we had